Hello and welcome. On 17th December, 48th meeting of the GST Council was held. During this meeting, several changes have been proposed to the GST law. In this video, we are going to talk about 7 such key changes recommended during this meeting. First, refund of GST to unregistered buyers in case of cancellation of contracts. To understand this in a simplified manner, let's consider a scenario. Let's say here is a flat available for booking, the price of which is 50 lakh including GST. Possession in 4 years. In Jan 2021, let's say you book this flat and pay an advance of 10 lakh. In Jan 2022, you make the second installment payment which is 15 lakh. In Jan 2023, the third installment of 15 lakh is due, and in Jan 2024, balance of 10 lakh would be due. Now in GST, as far as services are concerned, including construction services, as and when you make payment to the builder is required to pay GST to the government. So out of the first advance of 10 lakh, let's say GST component is 1.5 lakh, and out of the second installment of 15 lakh, it is 2.5 lakh. Now in December 2022, let's say this contract is cancelled due to any reason, say the construction is not progressing as per schedule or whatever may be the reason, and so far you have made a total payment of 25 lakh to the builder, which includes 4 lakh towards GST. Now in order to claim refund of GST which is already paid to the government, the builder is required to issue something called credit note, and there is a time limit to issue this credit note. For the first advance of 10 lakh, October 2021 is the time limit within which the builder is required to issue the credit note. For the second installment, November 2022 is the time limit within which the credit note should have been issued. Now if you observe here, time limit to issue credit note in respect of both these transactions is already over. Now because of this reason, the builder is unable to get refund of GST from the government, and we buyers end up paying this tax for a contract which is actually cancelled. The government has now recognized this issue and some changes have been proposed. That is, now the procedure would be made to let unregistered buyers like you and me, that is those who are not registered in GST, to file application for refund of GST. It is not just applicable for cancellation of construction contracts. It is applicable for cancellation of any other long-term service contract, say a long-term insurance policy, etc. This is a welcome move because what is a loss is now going to be refunded. The second change is no GST on the rent for the house used by registered persons. Now we all know that we don't pay GST on the house rent that we pay for our house because it is specifically exempted. But during 47th meeting of the GST Council, some changes were proposed. That is, if the house is being used by the person registered under GST, then such registered person is required to pay GST under reverse charge mechanism, that is RCM. Now what is this RCM? Usually in GST, the supplier collects tax from the buyer or recipient of service and pays it to the government. That is, when you buy goods or services, you pay GST to the supplier and the supplier would in turn pay it to the government. This is known as forward charge. In RCM, that is reverse charge, instead of the supplier, the buyer or the recipient of service is required to pay GST to the government. So after this 47th meeting of the GST Council, if the house is used by a GST registered person, now such registered person being recipient of service is required to pay GST under RCM. But this change led to a big question, that is, what if the house is used by the person for personal purposes? Even then, is the person required to pay GST? Common understanding would be if it is for personal use, then no GST. But this clarity was not there in the law, and this was a big problem for most of us. So now it is being proposed to issue a clarification which states that no GST would be applicable if the house is used for personal purposes. Let's say you have an organization which is registered under GST and you are the proprietor. Now let's also say that you are staying in a rented house and you pay the rent. Now if the house is used for personal purposes, then you don't have to pay GST on the rent. To put it differently, if you use the house for the purpose of your business, then being recipient of service, you are required to pay GST under reverse charge mechanism. Next, decriminalization of certain offences. In GST, if you commit certain offences, those which are listed in section 132 of CGST Act, like supplying goods or services without issue of an invoice, wrongly availing input tax credit, wrongly claiming refund of GST, etc., then the GST department can initiate prosecution against you if the tax amount involved is more than 1 crore. If it is proven, it could involve an imprisonment up to 1 year and you would also be required to pay fine. Now, it is proposed to increase this threshold limit of 1 crore to 2 crore. That is, when you commit these offences and if the tax amount involved is more than 2 crore, then prosecution proceedings can be initiated against you. And this increase in threshold limit would apply to all these offences except offences relating to fake invoicing. Now, what is fake invoicing? That is issuing invoice without actual supply of goods or services. So, if you commit these offences except those related to fake invoicing, threshold limit is being proposed to be increased from 1 crore to 2 crore. Next is also part of this head, that is reduction of compounding amount. Compounding means paying fine to avoid prosecution. Now there are certain offences which are compoundable under GST. Now it is being proposed to reduce this compounding amount from 50 to 150%, that is from a minimum of 50% to a maximum of 150%, to 25 to 100%, that is a minimum of 25% to a maximum of 100% of the tax amount. Next change is related to new registration under GST. To obtain new registration, we need to fill up the application online. We need to provide the PAN because GST registration is PAN based. Then mobile phone number and email address. OTPs would be sent to the mobile phone and email address. Once we enter these OTPs, we will be able to continue with the GST registration process. Now, this process has one big problem. This can lead to misuse of PAN because many times we have seen that GST registration has been obtained using PAN of a person and the PAN holder is not even aware of existence of such a registration. To fix this problem, some changes have been proposed. Now the phone number and the email address would be fetched from the income tax database. That is, whatever phone number and email address that you link to your PAN, this information would be fetched from the income tax database and OTPs would be sent to such phone number and email address. If you have access to these OTPs, only then you would be able to continue with your GST registration process. This would help avoid this misuse of PAN to some extent as long as you have linked your phone number and email address to your PAN. Next change is related to the difference in GSTR1 and GSTR3B. Whenever we file our GST return for any tax period, first we file GSTR1. If you are a monthly filer, then you are required to file it by 11th, and if you are a quarterly filer, then you may file IFF within 13th. Now let's say when you file your GSTR1, you declare a turnover of 10 lakh. Later, when you are filing your GSTR3B by 20th, you notice that you have wrongly declared the turnover as 10 lakh instead of 1 lakh. So you declare the correct turnover in your GSTR3B and pay tax accordingly. Now because of this, there is a difference of turnover in GSTR1 with that of GSTR3B. And this error in GSTR1 can be corrected only when you file your next GSTR1 because there is no revision concept in GST. Now within this time gap, GST department used to issue notices to taxpayers asking them to pay difference of tax. This was a big problem for most of us. So to address this issue, some changes have been proposed. Now whenever there is a difference in GSTR1 and GSTR3B, and if this difference is more than certain specified limit is not yet specified, say it could be 10%, 20% or whatever, when difference in GSTR1 and GSTR3B is more than the specified limit, then the GST department is first going to send an intimation to the taxpayer. The taxpayer would have two options. One is to pay difference of tax, the other is to explain reason for difference. If you don't do any of these two, then you would not be allowed to file your subsequent GSTR1. To put it differently, only after you pay the difference amount of tax or you explain the reasons for difference, you will be able to file your GSTR1 for the next month. Next change is related to reversal of input tax credit when the supplier doesn't pay GST. We all know that we can avail input tax credit when you satisfy 5 conditions. First, you should have tax invoice. Second, you should have received goods or services. Third, your supplier should have paid taxes. Fourth, you regularly file your GST returns. Fifth, the transaction should appear in your GSTR2B. GSTR2B is a summary of input tax credit. It is auto-populated on the basis of GSTR1 filed by your suppliers. Now, for any buyer or recipient of services, out of these 5 conditions, it would be possible to satisfy 4 conditions except one, that is, the supplier should have paid taxes. As of now, we have no mechanism to find out if the supplier has actually paid tax in respect of a particular transaction or particular invoice. Now, if the data appears in GSTR2B, we can say that the supplier has filed GSTR1. We can also see if the supplier is regular in filing GSTR3B, but we have no way to find out if a particular transaction or a particular invoice is included in the GSTR3B filed by the supplier. So, to address this issue, a new rule is going to be introduced, Rule 37A. This rule would provide us the mechanism to know if the supplier has actually paid tax for a particular transaction or particular invoice. If the supplier has not paid the tax, then you have to reverse this input tax credit because you don't satisfy all 5 conditions. As and when the supplier pays the tax, you can reclaim the ITC that you reverse. So once this change is implemented, if the supplier doesn't pay GST, you will be forced to reverse input tax credit. Next change is about time limit to file your GST returns. As of now, there is no time limit to file GST returns. I mean, we have due dates, but if you don't file your GST returns within the due date, you can still file your returns even after the due date as long as you pay interest and late fee and you don't avail input tax credit wherever the time limit to avail input tax credit is over. Now, it is proposed to introduce a time limit of 3 years from the due date of filing of GST return. Be it GSTR1 or GSTR3B, GSTR4 to GSTR8 for specified taxpayers, annual return like GSTR9 or GSTR9C. For the financial year 21-22, we have to file annual return GSTR9 by 31st December 2022. So once this change is implemented, if you don't file your GSTR9 within this due date of 31st December 2022, the last date to file this return would be 3 years from this due date, that is within 30th December 2025. These are all some of the key changes that have been proposed during the 48th meeting of the GST Council. As of now, these changes are not applicable. As and when the CBIC, that is Central Board of Indirect Taxes and Customs, would issue relevant notifications, these changes would become effective. That's all I have for you in this video. Thank you for watching.